Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today is Tuesday. It's January 11th. It's about 8:04 in the morning. The market's going to open up in about an hour and 26 minutes to be exact with you. As you can see here, the markets are pretty strong today, a little bit beyond random on NASDAQ 100. We're up about 60 points. The Dow's up about 58, and obviously the S&P will be up if the NASDAQ and the Dow are both up because the S&P 500 has mostly NASDAQ and Dow stocks in them. And even the Russell is up today pretty good. Now, we are coming off one of the worst tech sell-offs that we've had in a long time. I'll get into all the details. But I just wanted to show you, this is my 90-10 pattern. This is my reversal to the upside. Usually we'll have 10, 12, 15, 5, 3, we've got 76 stocks that are making that made a 90-day high and made a 10-day low and closed near the upper end of the range. As you can see here, all of these stocks. Look at that. The real estate sector, the healthcare sector, the tech sector, the semiconductor sector, all across the board. JP Morgan. The bottom line is it looks like a big reversal day, or at least it will in the morning when we open. The reason I say it will when we open is because, oh boy, at 10 a.m., half hour after we open, Mr. I'm going to predict the future. Oh, wait till I can't predict the future anymore. Mr. Jerome Powell is going to be speaking and talking to us about inflationary pressure. And that's going to set the mood for the rest of the week. If I had to make bets, he's probably going to be very, very cautious and use words like, we will see, we'll have to figure out how the economy stands, maybe the O variant will slow things down again. If he starts talking about Delta and O variant and COVID slowing things down, that's a sign that he's going to push back and continue buying bonds, which will cause the market to rally like there's no tomorrow. Or he could double down and say, inflation is just too high and it may curtail the stock market, and O variant is not really bothering America. That may so let's see which direction he talks, but that's going to happen at 10 o'clock. Then we're going to have Red Book in about 49 minutes. That's going to give us a good understanding of the retail sales report that's coming out on Friday. Tomorrow we've got CPI, which is big. Then we've got PPI, which is big. Jobless claims is not big. Then we've got retail sales, which is probably the biggest report aside from Mr. Jerome Powell speaking. Looking at the bond market, as I mentioned the last few days, the bond market looks grossly overdone. I'm not going to take a position to the upside because I want to follow the trend. But at this point, it looks like the bond market's going to go higher, and hopefully it'll go back to the 150-ish level so we could sell the living you-know-what out of it, because the long-term trend is bearish and interest rates are going higher, and I don't want to be on the wrong side of this market in that respect. But remember, the consumer discretionary and bonds have a very, very, very high correlation. So if bonds go up, interest rates go down, and consumer discretionary stocks go up too. And that 90-10 and the big meltdown in tech is telling me that we're going to have a nice little rally in both the bond market and tech stocks and consumer discretionary stocks over the next few sessions, which can really do a wonder for some of the stocks that have been beaten down like crazy. As you can see here, the bond market's up prior to the opening, almost a full handle here. Now, looking at the put-to-call ratio, we're still coming off a very bearish territory, not bullish. So the market has more upside to go. We're only at 90 now. We're nowhere near the 75, even 80 level. And as you can see here, it looks like we're coming off of bearish levels, not bullish levels. So that's encouraging. Volatility is not really that high. This is it. I think it's going to cool off. It's already down 20%. Or 1%, 20 points, or 0.20. The bottom line is volatility went from 16 to 19, which is about 20%, and I think it's going to come right back down. I don't think volatility is going to be high. The bottom line is the put-to-call ratio and volatility are both suggesting that this meltdown that we had in tech and consumer stocks is really not anything major or something we need to pay attention to. Looking at the SPY, it looks like we're at the 50-day moving average. We had a nice little gap down yesterday, went up, this little tail, I call it, tail gaps, although it wasn't much of a gap really, or it got filled. But either way, it looks like we're above the 50-day moving average. If we could stay above the 50-day average today and tomorrow, there's a good chance we'll hit all-time highs. looking at the QQQ, which is the linchpin of this downside correction, we're down pretty good here. And again, we're looking to see if we can go higher and break above the 50-day moving average. The downside on the tech is much worse because chips took it really under the chin on this downside. But again, I'm fairly bullish over the next few days, assuming Jerome Powell doesn't say something crazy. Let's talk about global economy. I'll make it really, really quick. Investors are keeping their eyes on COVID cases, especially in China, where third city has locked down its residents. I mean, no one's dying. I mean, Florida, we have like thousands of cases and there's been 3 deaths. So it hasn't really, I mean, people are getting sick, but no one's dying, which is why COVID was so feared in the first place. I just want to remind everybody, because it was a deadly. If everybody said COVID is a mild cold, I mean, would anybody really care? Japan is also seeing a dramatic surge in reported COVID cases, which experts say are mostly Omicron. And that's the point. It's mostly Omicron. And Omicron isn't killing anybody. Higher inflation is taking a toll on American families. It's transitory, Mr. Jerome Powell acknowledged in remarks to be delivered on Tuesdays. Congressional hearing, Powell's nomination. Don't get me started. I don't want to even read about this guy. He's a real mess. But anyway, high interest rates make stocks expensive. Tech companies and other pricey growth companies less attractive to investors, and the sector has been slipping as bond yield rises. Like, we don't know that already, right? The tech sector has been the biggest weight on the market through January, is coming off its worst week since October of 2020. So I am expecting some upside in stocks. Looking ahead, the U.S. Department will release Consumer Price Index for December tomorrow. The agency will give investors details of how inflation is impacting businesses, and then Producers Price Index for December on Thursday. And that's kind of what I was trying to show you. Tomorrow and Thursday, we've got the producers, and then we've got the consumer, then the producers. So it'll give us a good understanding of how inflationary pressure is impacting businesses and then people. Then on Friday, we've got earnings from bank stocks, Citibank, Chase, Wells Fargo. The bank stocks are starting to report. That's going to be very, very interesting. I'm looking forward to seeing earnings. And if earnings on tech are substantially better than expected, that can override the concern of rising interest rates. Again, today you want to keep your eye. If I were you, here's what I would be keeping my eye on. I would be keeping my eye on the Dow Jones, and if the Dow Jones rallies or hits the 50-day moving average, I would keep my eye on the SPY and whether the SPY continues making higher highs or starts coming down here. And if you are a tech trader or a QQQ trader, we want to see price go rally higher above the 387 level, and hopefully over the next day or two hit the 50-day moving average. That would be amazing if that happened. I would really love to see that happen. So that's what I'm hoping for over the next few sessions. Now, sector analysis. Cumulatively and monthly, they're starting to look more alike. Energy, consumer staples, financials, defensive. On a monthly basis, energy, consumer staples, financial, defensive. But I think that may change. The number one sector right now is energy. The worst sector, communication. We've seen this picture before. What's the strongest energy stock? It's Devon Energy, of course. Let me show you. And I think we're long Devon Energy. Devon Energy, right there. The number one energy stock. What's the weakest sector? Communication service sector. What's the worst stock in the communication service sector? Right here. Charter Communication. Right there. That's the strongest and the weakest stock. So you've got Devon Energy, and I love Ford, by the way, but that's not an energy stock. And you've got Charter Communication, the strongest and the weakest stocks. Now, before you guys go, I've got something really, really important for you. And by the way, tomorrow, I'm going to give you a long stock and a short stock actionable trade idea with levels. Tomorrow in the morning. Don't miss out. And before you go, boy, oh boy, I've got a treat for you. Anyone placing trades during the week may actually be stacking the deck against them. Look, every week, thousands of headlines, earnings, bad news, out of Federal Reserve, China wreck. Oh boy, what may seem to be perfectly good trade setups. They're messing up good trade setups. So instead of traders risking their hard-earned cash during the meat of the week, there's a simple Friday afternoon strategy that helps skip all of the madness. New money crew, head trader, Lance Ippolito, he'll be going live today at 1 p.m. Eastern Time to talk about this powerful weekend strategy. Again, don't spend time in the market. Get in, get out, less time in the market, less risk, less opportunity for the market to ruin your position. Learn about this weekend wiretaps. It's happening today, 1 p.m. Eastern Time. And as always, make sure to like this video, subscribe to this channel if you're watching on YouTube, stay ahead of this crazy market, be the first to be notified when we post our next video. And remember, tomorrow, one long, one short. Follow the link below this video to sign up for Lance's Weekend Wiretap. It is cool. I love this program. I am very partial to this program because you don't spend a lot of time in the market when things can go wrong. In on Friday, out on Monday. What could be better? Follow the link below now and send me some love letters. Support@marketgeeks.com. I want to see if you guys are getting value out of this. I feel like I'm doing this for myself. I know there's thousands of people watching it, but it'd be nice to get some feedback. Bye, guys. Take care. Have a great rest of the week, and I think we're going to be bullish today.